We had two significant clearing events, obviously the election, positive news on the vaccine, on the backs of very strong earnings momentum, which I think when we reflect back 6 to 12 months from now, we will see that the second half of this year really marked a trough in profitability. And now, when we're sitting 6 months from now, I think we're going to be focusing on percentage of folks that have received the vaccine and not contracted the disease. So there has been a significant sentiment and clearing event that I think bodes well for those that are looking for value in the market. And it doesn't necessarily mean just pure Russell 1000 value versus Russell 1000 growth. I think it's where are you seeing mispricing in the marketplace? And there's a ton of it because an average S&P 500 stock is lagging by almost 700 basis points. So we think there's a lot of value to be had.
Yana, where specifically? What sort of sectors and names?
A lot. I think when you look at the marketplace right now, you've only had the lead in 4 out of 11. The laggards have been within healthcare, industrials, obviously financials, and also within the consumer discretionary space. Believe it or not, while consumer discretionary is up over 25%, the average stock there is actually down year to date because most of the work has been done by Amazon. So I think within the retail, specialty retail side of the equation, there's some opportunities there.
Abdur, what about you? Growth versus value. We've seen both of those work on different days this week. It's been really split 50-50, the guests that we have on CNBC. And if it's value, like Yana, where is that value?
I mean, what we're seeing is that we're looking broadly at what we see on the labor markets as well. And the time that people return to work will certainly impact growth. But from a growth over value perspective, after post-election, we did a tactical adjustment to monitor overweight to risk. We are favorable to high yield, global listed infrastructure and investment grade bonds. We see those as areas that will continue to accrete value for clients. We do have a long position on value. We see it as a compensated risk factor, and we're starting to see that rotation back into value as investors are taking a little bit more risk in their portfolios and looking to actually come out of that value trades. That growth trade's been quite frothy. I mean, almost over a decade now. And so we're seeing a rotation back into not just value, but small cap equities as well. They should allow some type of upward pressure for investors to actually take tactical positions in the market and again, see some compensation for risks that they're needing in their portfolios today.
Shepard Smith here. Thanks for watching CNBC on YouTube.